This area is an amazing play if you have between $800,000 and $950,000. Alexandra Hills, let's get into it. Now, Alexandra Hills, or Alex Hills, as the locals call it, is a suburb in Brisbane. It's in the council region of Redland Bay, and it is what I believe, regardless of data, I think it's one of the best value for money places you can go as an investor. And why I like it, it is just a little bit more. If you have the money and you have the budget, and it allows you to get out of your Logan Centrals, your Kingston, and so on. Right now, obviously, all these areas have performed considerably well over the last 5 years post-COVID. And these areas are going to continue to perform. As I've mentioned in our podcast talking about Queensland starting its next cycle, and $800,000 houses will be $1.3 million by the time of the Olympics. If you haven't watched that podcast, make sure you go check it out. But it's just a little bit more in price point, by roughly $100,000 over a Logan Central type of purchase. And I tell you what, the suburb is totally different. So we have a higher percentage of owner-occupiers. I think it's 78% for Alexandra Hills, as opposed to where it's pretty much the opposite, where it's majority renters in lower socioeconomic areas of Logan, like Kingston and Logan Central. So what we want in an area is owner-occupier appeal. I'm not saying that areas without owner-occupier appeal don't grow, because it's all based on demand and supply metrics, right? But for the sake of just a little bit more, you get out of technically what everyone categorizes, and just so you guys know, we are in Logan. We're based in Brisbane, right? For the sake of getting out of Logan and getting into Redland Bay, being 5 minutes from the water, being in an area that's predominantly owner-occupied, like the way Alexandria is, and neighbours Birkdale and Alexandra Hills is 22% renter and 78% owner-occupier. Now, this appeal for just a little bit more, it's got that owner-occupier appeal, it's got the good ratio of owner-occupiers to renters, but it's got a higher ERSAD score. Being not too far out of Brisbane, being 5 minutes to the water, not being in Logan City Council, and mind you, we buy plenty in Logan City Council, so there's no hatred of Logan here, but I think the value for money is in Alexandra Hills. Okay, so now the data set for Alex Hills looks really good. We're going to talk about the RCS scores first, which is essentially, it's calculated based on all the metric where weighting is assigned. So it's kind of like a data cheat score, and then we'll go through the data and literally break it all down. But sitting here at 95 for low risk is fantastic. Capital growth of 82 and cash flow of 85. This is a very, very high scoring property, very high scoring area, that we don't see too often. There's not a lot of places that have this type of scoring around the country, and it's definitely very, very strong. Okay, projected annual ROI, 19% on the high side. We have been seeing 10 to 12% over the last couple of years, and we are going to see that fantastic growth. I picture these properties at $900,000 right now, moving towards $1.5 million, just under $1.5 million around the time of the Olympic Games, right? So fantastic growth. Typical price, $960, 3 betters at $900, 4 betters at $1,019,000. I am finding deals in that low 800s to high 800s for a 3 better on a 600 to 750 square meter block of land. I think they're the best value for money. So if you can find something with an 8 in front, that's what I would be looking for with a good land component. Now, if it's subdividable, even better. If not, buying something with a granny flat potential is just as good. Maybe even a high set with, a downstairs bathroom and a kitchenette rumpus. That's always a benefit to have that extra living space. So for those of you down south who find our houses weird up here, the high set is kind of like a double story that was never made into a Sydney type of double story style. It's not always legal height downstairs, but it is a usable space for the kids. But you can even throw your mother-in-law down there as well. It's got that usable space. Now, as you can see, the growth curve looks very, very healthy, with it projected to be up to 1.1 mil in the next year. I see this happening. I'm seeing it happening on the ground right now. We're seeing 20 people to an open home. There's a limited amount of stock on the ground. So this isn't just the data talking. This is what we're actually seeing on the ground. And there is no stock. It is pushing prices up because a lot of people, for every one of those 20 buyers, there's obviously going to be 19 missing out. So that is happening. 3 bedrooms are renting 600, 4 bedrooms are renting for about $700 a week, averaged out 650 in the median. A lot of the stock we're buying, coat of paint, just to tidy up, right? You don't want to be renovating too much unless you really love that stuff. But the coat of paint, flooring, down lights, and we are seeing 4+% yield on some of the stock we've been buying. Why I love Alexandra Hills and Redland Bay is the URSAD score. This is before I get into that side of things, the URSAD score is the index of relative socioeconomic advantage and disadvantage. This sort of measures how wealthy or how affluent, the income of the, people that are living in that area. So to give you an example, a Double Bay or a Toorak or a Hamilton in Brisbane, they'll be a 10. And not might be, they will be a 10 URSAD score because a lot of people are earning good money there. And let's say a Logan Central, a Mount Druitt, a Broadmeadows in Melbourne, those will be your 1 URSAD score. Right now, this is sitting at a 5, whilst a comparable house that may be $750,000 or $800,000 in Logan Central would have a 1 to 2 URSAD score. And this is sitting at a 5 URSAD score. And honestly, for that little bit more on price point, I really, really like that. There's not a lot of units in the area. Renters to owners, 22% renters, so 78% are owner-occupiers, which is flipping the script on a lot of areas. Let's say that figure would probably be close to opposite in a Logan Central, where the majority would be investor and renters as opposed to owner-occupiers. So I really like that demographic. It's a more stable market. If there was ever a downturn, you wouldn't see your property dip too far because of that. Years to own sitting at 44. Now, 44, we love to see years to own a lot lower, and a boom market like right now we're buying in some markets with a 19 years to own. Now, a years to own is how many years does an average wage take to pay off the property prices in the area, right? So Toorak, for example, would be 90 years to own based on, what the wages are in that area. So it's very expensive. A lot of Sydney would be 60, 70, 80 years to own. So 44 years to own, obviously showing that it is not super affordable, but it is not expensive. Stock on market sitting at 0.23, super low right there, and it's trending down. Why is stock on market's trending down in a lot of parts of Brisbane? And it's because there is no stock. There is a limited amount of new approvals happening and coming to completion. There is people looking to hold for longer. That's trending downwards, right? So the trend line gives us an indication. Now, 0.23 gives us the statistic on where it's at right now. Demand sitting at 19 days, right? That is 19 days because there would be a few that would be unrealistic in price point, but the majority of stock that we're seeing is gone straight away. It is doing very, very well. This area is an amazing play if you have between $800,000 and $950,000. You can get stock in the 800s. Let me show you a couple of examples of deals that I like in Alexandra Hills. This is 807. Right, $807,000, 3 bedroom, 716 square meter block of land. Something like this obviously slopes to the back. It hasn't got a renovated kitchen. It's just a basic, very, very standard type of home. But for $807,000 to get into Alexandra Hills, that would be ideal for a low entry price point like that. If you do have a bit more than the 807, buying something on 1,000 square meter block, this is low set, brick and tile, concrete slab on ground. It's not a high set. It's got a pool. Kitchen's a little bit average, but in general, a kitchen and paint on that property would go, really, really well. $870K on 1,000 square meter block, and that's a 4-bedder, right? So these deals are out there, and this is the type of value for money we'd be looking for. The more land size you can get, ideally, the better it is. If you can get yourself something subdividable, or you can get yourself something that you can granny flat, corner block, all those sorts of things that you want to focus on as an investor. So for example, if you do go to a cheaper property like this one, 13 Sallows, right? This is just a 3-bed, 1 bath. This is very kind of investor stock, right? Doesn't have a great deal of owner-occupier appeal. But to make this, see, it's not fitted out downstairs. It's just the 3 bedrooms upstairs, but the 716 meter block. If you could granny flat, that would be great if you're going down that cash flow play route. But if you wanted to get a little bit more owner-occupier appeal, a good 3-car shed on that property would be a great addition, especially if it's got a bathroom, shower, and a bar, because everyone loves a good shed in Queensland. That would give it more owner-occupier appeal upon your exit, which would target a certain demographic and obviously, get you top dollar. So, think about all those things that should all come into play as to, how you're going to exit and whether or not that property is right for you and it suits your strategy. But that value for money is there, whether you are going that entry-level $810,000 property or you're going to pay $900,000. But when you compare these prices to Logan, I think the value is really here. And I think even though it's performed really, really well over the last 5 years, you haven't missed out. It's the start of the next cycle and property prices are continuing to go up. We're seeing it on the ground. There's a lot of value here. Get in the market. Please, if you got a lot out of this, like, share, subscribe. Check out the other video of the case study we did earlier. We're going to put the link in the description. And until next time, take care.